Source. Da, 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 da. Bum 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 bum. Hello, hello, hello. Is this good or is this echoing? Hello, hello, hello. Is this okay? I can also put on a headset, which might help. No, okay, cool, perfect. Just comment any questions you guys have. Um, yeah, we're just gonna take this one candle at a time. All right, so pretty strong SMT here. We have NQ holding pretty much perfectly, not doing much, and we have the ES just absolutely knifing. This inverse FEG really thought we should get a move up to at least this liquidity up here. So if you look at this 1 minute chart, or what was it, the 5? I think it was the 1. I longed somewhere around here, and then targeting this double top here, liquidity, and then I got stopped break even on that push back down. Now it's just it is FOMC day, so we're gonna get a lot of kind of bizarre price action, things that you wouldn't ordinarily see. So conditions like this can always be tricky, especially before FOMC. Usually an hour, half an hour after FOMC, price action resumes to, it's very volatile, but it's a lot cleaner. So um, before then, anytime I'm trading before a major news event, whether it's the day before FOMC, the morning of FOMC, the day before CPI, even the week of CPI, which is also this week, or not CPI, NFP, especially NFP week, pretty much I'm always going to be targeting internal liquidities. So I'm almost never going to hold positions for external. Maybe a runner or two, but mostly I'll be getting out like full position or almost full position at all internal because you get so much manipulation and just like unclean price action. So it's usually from what I've back tested and from just the years of trading I've experienced, it's usually not worth holding many runners past internal liquidity. Yes, okay, yes, you're going to get sometimes it works, but from what I've back tested, generally it's best to just get out internal liquidity and then resume trading as normal um, post NFP, post CPI, post FOMC, things like that. But yeah. Okay. All right, let's start marking up this chart. What do you say? So probably going to see some sort of SMT here. Definitely looking to be long bias because of this here. Okay, this is definitely big. If you're trading NQ, I would especially look for a move on the 1 minute chart over this FEG. If we get a move over this FEG, we definitely are most likely going to be targeting this. So we could easily take a scalp over this FEG, and then if we get like a 1 minute or 3 minute, 2 minute FEG, bullish FEG, we can take some sort of entry off there, targeting this buy side, potentially some sort of BPR or something like that. But until we get a close over, definitely don't look for any long position because you're going to get chopped up or the bias just is not clear enough. So really no trades until that occurs. If you trade ES, I would say pretty much the same thing, right? We're going to want to target uh, a run to buy side. We have low resistance liquidity here, right? And then we want to see a move over this FEG here. We do have low resistance liquidity here, but if we get a close above this 1 minute, which we just got now, I would be pretty confident that we're probably going to get a continued run. So let's just hop on a paper account for you guys to see. Let's see, how do I do this? Can I? Oh, here we go. Reset. Take a fresh 100K. Looking at this here, and then we just see what's the cleanest. So the 2 minute looks very clean here. So this would be like a break-even stop here. So I would especially be looking for, oh, there we go. We're going to get the push up. So bias is accurate. Probably going to get this push to here. I would want something like this. Ideally, you want to take an entry. If you're looking for longs, you want to take an entry before internal gets swept. So you really want to see this push back down, take an entry off here, and then target. I would take an entry down here. Once we get a push over buy side here, this internal stops to break even, and then targeting this liquidity up here, which is 5 minute BISI, or SIBI, sorry. So that's probably going to be the best bet for this current price action. Same thing with ES, looks really good for longs on this push above. Can even look at a, can look at a 30-second chart as well. So this little FEG here probably. So let's hop in some longs here on a, this is, again, paper trading, this is FOMC. I would never be risking live funds. So personally, this is an eval day for me. Right now I'm not trading anything, but you either want to be trading paper accounts or an eval account. I would not be risking live funds because we get such crappy price action. So on a trade like this, your stop is going to be a close under this inverse FEG, which happens to be a BPR. So we can label this BPR if that helps. 2 minute is obviously cleaner than the 1 because there's no FEG in the 1, so we're going to stay on the 2 minute for this type of trade. And we need this to hold this on the 2 minute. If we get a close under this, that would be your stop out. All right, so let's long position here, targeting about 20 points. Okay. Stop loss, it depends on where we close. 20 seconds left in this candle. But as you can see, like this is good risk to reward. Even if this fails, we're looking at a 2, depends on where this closes, but most likely we're not going to get more than 10-point loss. So looking at about a 2R, which is not bad. It looks like this should hold here. Now it's pushing back up. So we held. Again, this is paper trading, right? You should never be risking live funds on a FOMC day. It's just really, really, really not smart. I mean, I'm still bullish though. This looks still fine. So it looks like this isn't going to hold again. This is why you paper trade this, right? Because it's FOMC, so it's just really not smart to be trading live funds on days like this. We have low resistance liquidity down here, and I can almost guarantee you any other day this setup is probably going to work for a run to buy side. Today, all bets are off. So this is to be expected. Just for the purpose of educational purposes, just to see how this type of trade would work, I'm gonna kind of move this along to see where the 2-minute closes. Likely, we're probably gonna sweep this in here and just rip up though. But for the purpose of this, I'll just close out here. And then now we have potentially a better setup actually, because now we have equal highs. We took out liquidity here. We still have the SMT, right? And this is actually a much, much, much better setup. So if this thing closes above, even on a day like today, I would be very surprised if we don't get a move to buy side. So this right here, I think, time is it? Yeah, I think even on a day like this, I think this is a very solid trade like on an eval account. If you're trading an evaluation account to get funded, this could be a very solid trade setup if we get a close above this. My computer's about to die, so I'm gonna charge. I'm gonna go grab a charger and be right back. So yeah, now we're getting the rip up. So it wanted this liquidity down here, and then now it's probably gonna go ahead and target buy side. So in anticipation, I'm probably gonna grab. Yeah, it's gonna close in 8 seconds. So let's go ahead and grab a position here. Again, paper trading this, so it doesn't matter. But same stop loss. Stop loss is a 1 minute close below this. I'll be right back. Yep, and here we go. Just as expected, this is the move on up here. So this is actually a very clean setup, clean trade. Yeah, this looks really nice. And now we even have this right here. Okay, sorry. Yes, this looks very, very good. On a trade like this, um, the way I would trade this is like this. We have full take profit, um, about a 10-point stop ish, so not too bad. And then this is break even, or this is partials plus break even. So partials break even. So yeah, there we go. And we're probably gonna get the move right here. And there we go. Getting the rip on up. I did not wait for FEG close once we swept liquidity. I'm not sure what you're talking about here. I did wait for this liquidity right here. We swept this liquidity, and then we got a 1 minute close above, and this is where I took the entry. Took it like right on this candle here, right as we closed. Came above, we closed, entered here, and then now we have half, half, break even once we get to here. So here's this. Full take profit is up here, right? And then we would go ahead and click this, sell. Let's do half. So four units there, and there you have it. This is the trade plan here, right? Now we even have a CISD here, so this should hold here, hopefully. There it goes. This is like rocket fuel here. Once we get a tap back down to this, the 1 minute starts to hold, and this should rocket right on up. Gotcha. You was watching. Oh, okay, yeah, that's why you're watching the 2 minute chart. So there's the half position should be taken off right there because we got the partials break even. So now we go ahead and move this up to break even or right above, and then we go ahead and target the next liquidity, right? Nice and easy trade. Now we don't care. Right now it's just either we get full take profit or we get break even. I'm not gonna, no matter what happens, you should not touch this. Like, you shouldn't get emotional and get out too early. You should not get emotional and like move your stop or whatever. Like some people are gonna mark every little tiny thing, but it's just personally not my style to try to overanalyze every single second of every tick. It's just keep it simple when you can. So things like this, we got our TP1, a nice trade here. Now it's just allow the trade to play out. We either hit full take profit or we go ahead and we get stopped out. The only other thing you could potentially do is instead of, let's say you have 8 minis to begin with, or let's say you're trading micros, you get 10 micros, eight micros. You take 4 out there, and then you have 4 left, micros or minis, whatever you're trading. Maybe you go ahead and if you're bullish still, right? You're still pretty bullish. Maybe you go ahead, you move this up, and you do something like this where you take, whoops, and you do create order. You sell, instead of 4, you sell 3, so you get pretty much fully out, and you hold like 1 runner for like the big play. You know what I mean? And then you really don't care because it's one. It's one. You know what I mean? There it goes. There's the trade. Should be fully out there if you're trading the way I would trade this. And that's a really beautiful 24-point trade. Very simple. Yeah. And then what would you do? if you wanted to hold another mini. The reason I wouldn't is because we're on a day like today, it's difficult. Plus, we have this 5-minute FVG, so it's really not smart to. But just for the purpose of education, if you wanted to hold another one, the only real reason to do so is to target these relative equal highs. So you should then, where did I have this on? This one. Go ahead and target this move. Why is that smart? Because I had 8 minis. So I got most of my position out. So the only way for me to make it even worth it to hold another one is if I went for some really big target with stop to break even. Right now it makes it worth it because I'm making an extra $1,000, 1,300, and on this trade we made. I don't really know because I took a loss earlier, but I took one loss. I've taken now one win. No matter what, I'll be in profit. Even if this breaks that stops break even, this will be my profit. So this is exactly how you trade unemotionally using good risk management. This is a textbook trade here. Equal highs, lowest liquidity swept, 1 minute inverse FVG. This is absolutely beautiful. We have equal high on 2 minute. Is this what you're talking about? The one that we just took? Let's put. Oops. uh, Labels are a little confusing. Okay. It's flying. We have equal high on 2 min. Yeah, equal high above. I think Ether should hit 17,426. What are you talking about? 17, yeah, this is exactly what I'm talking about. 17,426. Now, this is important. Let me show you. So, where was this? Yes, here. Let me see something really quick. So, this appears to be equal highs, right? However, we did wick this by a tick. Yes, the market should attract to relative equal highs. However, it's more the market will attract better to relative equal highs if it did not wick this. So if this was higher and this was a tick lower, then it will attract better. But if you listen to ICT himself says the market only needs a singular tick to grab liquidity in certain cases, certain scenarios. So yes, the market attracts here. Yes, this is a good target, of course. However, this would be an even better target if it was perfectly equal or if it wicked below it but not above it. So that is important to note. Still going to keep my target here on this right here, right? Still a good target. However, that is still definitely a good thing to note. Got you. Good to know. Yes. If you have any questions, also continue to let me know. If I were marking every little thing, I would do this. And what's interesting about IPT is um, high time frame versus low time frame, right? If we continue to bounce off like the 1 minute chart, we're still bullish. That's a given. However, lots of times when you start to get too much into the lower time frames, you start to see like PD rays like this, where you have order block here, and if we close below on 1 minute time frame like this, you're like, oh, we're probably going bearish. Well, it's like maybe we might be bearish until this swing low on a 1 minute chart, and then maybe we bounce off of this. So it's really important to like look at each individual PD array, um, and kind of have a good understanding that even if we do close under like one order block, there's another PD array just below under liquidity, right? Each PD array that gets violated in my mind is like, okay, we're probably gonna get to the next liquidity on this time frame. So if we violate this order block, this is the next liquidity. So this doesn't give me any good information, if that makes sense. Now, if we go to like a 5 minute chart, for example, and we violate, let's see, like this is a good example. If we violate this 5 minute FVG, as you can see what we did here, there's no, we're gonna target the next liquidity, which is up here, right? So that's why the higher time frames are so important to realize. And then you go to the 15 minute. 15 minutes even better for trying to find bigger targets, because you can now look at this. Once we violated this, now we have a clear run down to this liquidity down here. So it's good to, and then you go up to the hourly, right? And you have the hourly, and if you violate, let's see, what's a good one? Even better, you violate this FVG. Now we have a clear run of, you know, 60 points. So now when you get a close above here and you get to here, you can pop into the lower time frames, find liquidity purged down here, and now you get the run up here. And this is where higher time frame buys is so much more important than just staring at the 1 minute chart every single time. Do you trade unicorn pattern? There is one on 2 minute on ES. I was eyeing, but it failed. Yes, I do trade the unicorn. It's not the most prevalent model I trade, but I mean, I do trade it. Let's take a look at what you were seeing. Let's do this. ES. I honestly don't trade ES very much. I stick to NQ mostly, but I do occasionally trade ES. Let's see what you're talking about. Is this what you're talking about? This breaker here? This is it, right? This is what you're talking about? Yes, okay. Okay, let's take a look at why this might have failed. Back up. Okay, nothing there. So first of all, if I was trading this, I would kind of refine this in the 1 minute to this. And then I put this here. Yeah, honestly, I could not give you the perfect explanation on why this might have failed. Um, yeah, I really could not give you a perfect explanation. The only thing I could say is when you're trading a unicorn like this, in my opinion, it's best to wait and instead of entering at the breaker, unless you're like if you're really bullish or you're really bearish and you have good daily bias and there's other confluences that you have, like if there was, let's see, what does it look like to the left? If there was like a good solid fair value gap here that I felt strong that you're gonna hold, then there's your entries can kind of vary. But to me, when we're getting down to this area here, I'm thinking we're probably gonna hit liquidity, 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 right? That's the draw. So I wouldn't be super confident in longs as we're coming back down to here. So what I would want to see is instead of entering this 2 minute, the second we hop into this breaker slash this FEG here, which is probably what you were looking at, I would maybe come into the 1 minute, and once we start tapping into this breaker, right? See if you can wait for an order block to form or or an IFEG. So like if this was what I was looking at for a long and we tapped into this, I would see this as a potential order block, and I would have wanted to see this to happen. So we tap into this breaker, right? I would want to see this instead of just entering at the breaker. If I'm not super confident in this, which I wouldn't be, I would want to see us go ahead and get a pop off of this area here, right? This then creates this into a valid order block. Now I enter on a retest this order block. Or even if you're confident, maybe you don't even wait for the order block retest. Maybe you just see that we close above, that makes it an order block. Now you enter up here or on a retest, whatever you feel comfortable with. Now you have more confidence that we're going to go ahead and retest some highs. But I wouldn't necessarily just go ahead and enter at the breaker, wait for an order block to form in the 1 minute, something like that. That gives you more confidence that we're going to hold the breaker and then reach for new highs rather than just going ahead and trying to enter a falling knife right here. Does that make sense? That's a good point. Never thought about that. Thank you. Yeah, no problem. So now right here, I'm pretty confident we're going to retest these highs up here, right? This is pretty high confidence for me, right? So buy side liquidity. Now, but what else am I seeing? I'm also seeing on the near time frames, this is what I'm looking at. So what does this say? This says, yes, the draw is probably up here. However, we have a range from here to here that this thing can jump around between, right? So I'm gonna hop in on a little bit higher of a time frame. Also, I like NQ better, so let's see NQ. It's um, NQ, yes. Let's just go back to ES for now. Keep it simple. Let's see where else we can, what else we can look at. So 5 minute FVG is holding here, or 4 minutes, sorry, 5 minute, 5 minutes better. 10 minute, yeah. So only other thing you could do here is potentially put in some fibs. But it's not super clear, honestly, what is a good entry. I don't know. I don't know. I wouldn't enter this. You know what I mean? Maybe if we get under the 50% fib, if we get under the 50 and I get some better price action, maybe some kind of order block forms, maybe I can go ahead and target buy side, right? But as of right now, I don't know. I wouldn't enter anything. At least on ES. You can go ahead and take a look at NQ here. But yeah, ES, I don't know. I'm not afraid to say that I don't know. You know what I mean? A lot of people are like, their egos are so pumped that they feel like they have to know every little thing. They always have to know where the market's probably going to go. The most powerful thing is to know when you don't know and be okay not knowing. You know what I mean? So we have 5 minute FEG here on NQ. One thing I would want to see though, especially on NQ, is this 5 minute hold. This is kind of going to be like my confluence breaker, is what I'll call it. We have obviously this 5 minute FEG here, so I'm not going to mark it because it's pretty obvious. But the one thing I would be really, I'm just going to erase these for now. The one thing I would be really eyeing is this 5 minute OB. If this 5 minute OB fails, then I could definitely see us reach back into this at least. You know what I'm saying? This is kind of like, if this fails, I'm thinking minimum bias to here, and then I reevaluate what happens in here. But so long as this 5 minute holds, probably not going to be looking for shorts. I'm just going to get rid of these for now. It's just kind of annoying to look at. Just for the hell of it, I will mark this. Now, in my opinion, the most ideal thing to see that would give me good confidence, we're probably gonna reach for highs, go up like just to go up more, is if we tap this, come back up. But the big thing is I want to see us either just hold this FEG is fine, but B, if we can get a tap of the order block as a wick and then come up quickly, get a quick move off the order block and close this candle and get the candle to close above the FEG, that's going to be pretty damn bullish. So if I was trading a live account right now, which you shouldn't because this is a FOMC day, so always reiterate that. But if you were trading a live account on any other day, that is what I'd be like watching right now. I'd be like, okay, this is bullish, and I'm looking for a push down into this order block, a push back up, the body of the candle to close above the bottom of the FEG, and then that's when you maybe hop in a 1 minute chart and take an entry, or even then, maybe once we get a close, maybe that's when you take an entry and then you put your stop at the low of that candle. That would be a pretty solid trade idea there. It's like this is looking pretty bullish right now. So honestly, just because I'm on paper right now, if we get a close above this order block, I might just go ahead and long again. Just because it looks so strong. Yeah, look at that. I mean, it's just, this is like really clean, really obvious right now. I mean, especially for it being FOMC day and then just like hours before FOMC, this is looking like really nice right now, which is kind of surprising. It's very strange to me. Look at that, just immediate reaction once we get above it. Da, 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 da. And if you mark like a move, if you like fibs, I don't know, mark this move. Where does it happen? Under the 50, right? A balanced price range, nice and clean. Kind of right like the 65, 79, kind of this range here. Whatever you want to call it, golden zone, golden pocket, whatever. It's it's nice. So just for the purpose of this, I will put an entry by 3. Yeah, I'll do 3, whatever, who cares? If you do enter this, like this is, please, an eval trade only. You shouldn't be risking live funds, but if you were to trade something like this is kind of what you'd be looking at. At least I would take trims here, and then like a stop. For this type of trade, I put like a, oops, just get rid of that. I put like a stop, probably like right there, something around there. So this is a 1.6R. You know, not bad. It's fine. And then, you know, trim there. And then you could, once again, target the move, you know, maybe target this at 94, you know, or even just maybe target like 80 and then 94 and then all the way up here again at 26. But however you want to do your partials, it kind of just depends on the person. Looks like we're not going to get it, so that's okay. If we do push down, I'll just manually enter it. Fifty-two, 52, 52. Oh. Yeah, we probably want like 54 entry at the very earliest. And then what you can also do, yeah, is mark this if you wanted to. And in this case, you would enter at 53, right? If you want the balanced price range or equilibrium, whatever you want to call it, it's fine. And then you can even, you know, pop it on different time frames, make sure there's nothing you're missing. We did get this 2-minute FEG here, so that is something to consider. But I wouldn't worry too much about that. I don't think it's not gonna hold super strong. All right, so this is a very egregious move down. So if I was to trade this here, I would wait for the close of this candle for sure. Looks like it's gonna hold though. This looks really nice. So even if you did decide to put your limits in or whatever, still looks good, you know. All right, just for the sake of this, we'll a lot of mini. But we do have to consider this here. All right. And if you wanted the safe entry, you would wait, especially on explosive moves like this. You know, still think it's bullish because we have this order block, and usually a lot of these explosive random moves down kind of just get bought back up, especially on price action like this. But FOMC day can't be super can't be super confident, you know. So we'll see. And I'll be moving the stop to break even, which is below this order block. So if this order block fails, I should be getting out anyways. So this is like a perfectly good place to put a stop loss anyways. Just another reason that you shouldn't really enter with more size than that, just because if I'm out into a position, don't want to really enter more there. It's like this is good, this is fun. And if we do get a close, if we do get under this, then I'm gonna be, flipping bias probably. So looks like the 2-minute FVG here might hold. We'll see. Really, the most important thing is how this 2-minute closes, because that's where the order block is kind of based off of. Oops. So assuming we don't get stopped out in the next minute, wherever this closes probably will decipher whether we continue higher or lower. And there's the stop. Just as I say that. So, but like I said, this is how you perfect way to manage this because even though we got stopped on this, still up 1,000 on the day, even though it's paper account, obviously, but still good to see. Unemotional trading. So trade the paper account the same way you trade a live account, and you'll do well. You know. Now it would be unfortunate if we just barely got wicked perfectly to a T, but if you go here to here, bullish if we close this above 49.25. And especially if you look at 30-second chart, if we get a close above this inverse, or just if we get a close above this FEG, we can flip it to an inverse. That'd be bullish too. But it looks like we're gonna dump off of this here. So yeah. and exactly you get the dump off of that, right? So that's how I like to use a 30-second chart, smaller time frames, stuff like this. Gives me good really short-term bias. If we got to close above, we're just gonna stay bullish probably, and this 2 minute will hold. If we don't get an inverse and this FEG acts as normal and we, tap an FEG and dump, then likely this 2 minute is not going to hold. So it's just another tip right there. Now we go back to the 5, right? Whoa, big dump. Big dumpy dump. And now if we don't get a close above this FEG here, probably going down further, right? So as I said before, what the main thing I was looking for is the tap off the order block and then a close above. If we don't get a close above this, we're probably going lower. So we'll see how the rest of this 2 minutes plays out. But this could provide a decent entry on an evaluation account, right? Or if it was a normal trading day, if it wasn't FOMC, then you could take this trade potentially, this setup, if it plays out accordingly, could take this setup potentially on a live account. But this could provide a good demo trade. We'll see. But look how quickly we get a close below. Dump. This order block provided us even though it didn't hold, it provided us really good insights. That's what's key about ICT. It's not that every single PD array in ICT works. It's not that, everything is perfect. But what's nice is when things fail, if you see an order block fail and it's a clean order block, it's not just like a little tiny order block. If it's jumping out at you like this did to me. If this doesn't work as it should, we get a close below. Look how quickly this whole thing knifes. And that's why inverse FEGs work so well, in my opinion, because it provides such a nice bias. When it fails, when an FEG doesn't work after liquidity gets swept, when FEG doesn't work, it's like, okay, fuck your idea, excuse my French, but screw your idea of shorts. We got to close above. We're ripping. This is going up. And that's why I like the inverse. So you could even use inverse order blocks. That's basically what a breaker is. That's how we use breakers, because it essentially is the inverse of an order block, right? It's when an order block fails. So that's what's so nice about that.